All right, we're going to get started reviewing the very first example of DU underwriting findings, which is also known as desktop underwriting findings. Now, this is such a powerful tool. I'm happy that you're taking this course because you're going to get a lot from what you're going to learn right now. This is really, really difficult information to get access to that you'll find will really allow you to hit home runs when it comes to getting loans approved and closed. Now, by getting an approval through the automated findings, which is exactly what the underwriter needs to do as well. When you do this, you already know that when you send the file, the loan will probably get approved once it's sent to the underwriter. And when the underwriter runs findings, if for any reason they change things or information on the loan, they change the income, the loan amount, if they change those things, then the findings might change. But initially, you got already an approval. So your chances of continuing to have an approval will also remain that way. All right, we're going to go over the most important things. I don't want to tell you or talk about some of the things that the underwriters need to know or some of the codes that the underwriters need to know. I want you to be able to get loans approved and understand and know how to read underwriting findings. So let's get started. So basically, under summary, recommendation. In this file, we have an approval eligible. We have the primary borrower's name, the lender loan number, the submission date, and then it'll have the co-borrower's name on the right, the case file ID, and the DU version. This is general information, but the approval eligible status or recommendation, that's the most important thing you want to have once you've submitted the loan to the underwriting findings, either through DU or LP, because you can submit to either one or both and then see which one actually approves the loan. Now, under mortgage information, let's get down to the numbers. The loan to value or combined loan to value is 96.5% and 96.5%. So there's a good chance this is an FHA loan. And if we go over on the right, we see the loan type. It says Federal Housing Administration, which is the spelled out wording for FHA. The housing expense ratio is 46.07% and the total expense ratio is 46.07%. So possibly this loan, when it was submitted, wasn't submitted as a conventional loan because it needs to have at least 45% or lower of a total expense ratio, and FHA allows up to 50%. So that's one reason why this loan was probably sent to FHA instead of as a conventional loan. The total loan amount is $284,747. The sales price is $290,000, and the appraised value is also $290,000. In this case, this is a purchase, as it says, loan purpose. And then under refi purpose, obviously, there's nothing there because this is a purchase. The amortization type is a fixed rate, and the loan term is for 30 years, which is the same as 360 months. Now, let's get started going over some of the findings and what DU wants from us. So let's go first a little bit further down, property information. It says address, and then it says TBD, to be determined, which means the property hasn't been found yet. An offer hasn't been made, and there's no purchase contract yet. So this is basically a pre-approval, not an actual approval for the loan. But if the borrower finds an address, we would simply need to plug in the address and rerun the findings so that you have an address, but we already know that the borrower initially is already approved. And then when it comes to the property, you don't really have to worry about that right now because an appraisal needs to be done, and then the appraisal underwriter will go over the appraisal. So that's not really your job. So right now you would just want to make sure that the appraised value comes back at what it should be. Property type, this is detached, which means this home isn't attached to other homes, which basically means that this is a single family residence. Okay, let's go over the risk and eligibility. It's going to tell you what the risk factors are and how risky this loan is when it comes to getting it approved. So it says for number one, it says this loan has been underwritten through DU for government loans using the FHA total scorecard, and that's a scorecard they use to determine if the loan will get approved or not. 2, ZFHA should be entered as a CHUMS number. This is for the underwriter basically. So I don't want to overwhelm you with terms and acronyms that don't necessarily have significance in terms of getting the loan approved for you. 3, the FHA agency case number is required by the final submission of this loan, which is obvious. You have to have an FHA case number, and that's ordered through the case number department. 4, the minimum statutory investment required for this loan is $10,150. Now, this is very important. Now, they're telling you that the borrower has to invest at least or put down $10,150 to be able to make this loan approvable by DU for FHA. So this is very important. That's the magic number you need to remember for the borrower when you check their assets or their bank account. Now, a little bit further down, it says to refer all mortgage letters related to COVID-19 or for additional instructions on temporary policies that may apply to this loan case file. Now, there's other things, but this is during a time where COVID had an effect on loans. So sometimes there were people that were in forbearance and you have to wait a certain number of months where they've made consecutive mortgage payments after not being in forbearance anymore to be able to qualify for a loan. But let's move down to some of the more common terms and things that you need to be able to master to be able to get loans approved. Now, verification messages, approval conditions. 6, it says the lender must ensure full compliance with all FHA eligibility requirements and all requirements of FHA Single Family Housing Policy Handbook. You don't have to master the handbook because you have DU and LP findings. So whatever results you get here, that's what you need to learn and that's what you need to master. Let's go down to number 7. For cash out refinances with any form of secondary financing, or for rate and term refinances, no cash out basically, and purchases where privately held secondary financing exists, the maximum loan calculation must be applied outside of DU, which means it's a manual underwrite. Let's move on to more important things. Now, when going from number 8 to 24, we're going to go ahead and skip a lot of these things because they're general. This is general information that it might not be specific to your loan and you don't need to memorize these things. I want you to focus on the numbers. I want you to focus on the documents that you need to provide to be able to get the loan approved and eligible.